Hi, my name is Bob Mazey, and I'm the president of the New Jersey Agents Alliance. And welcome to another edition in an ongoing series of interviews with key decision makers and leaders in the insurance space and in the insurance industry. Today we're interviewing Frank Jones, one of the principals at Mintz Insurance, located in Millville, New Jersey. Frank has a particular specialty in the healthcare industry, and he's going to talk with us today about some of the special or unique challenges unique to the healthcare industry. So without further ado, I'd like to introduce you to Frank and start off with sharing with the group what are some of the largest challenges that the healthcare industry faces right now, and what are some of the things that you can do to manage that.
Awesome. Thank you, Bob. I appreciate being here and the opportunity. So I've been operating in the healthcare space for probably 20 years, and you have evolving risks that happen. You have the different market changes and malpractice. But right now, the most pressing thing within the healthcare arena are billing audits or clawbacks.
So when you say billing audits, billing to the patient, billing to the insurance company?
So the way practices and healthcare systems and treatment centers the is you go in for a treatment, they then develop the diagnoses and bill the insurance companies for the CPT codes. For the proper diagnoses based on what the treating provider sees is necessary. They bill the insurance companies. All of those claims go into the carriers, the payers, whether public or private, CMS or any of the third-party payers, and they're adjudicated electronically. So no hands or eyes touch those claims now. They just go through the system. At some point in the future, the payer, whoever that might be, has contractually an opportunity to and a desire to review those files for appropriate billing as they deem it. And so the billing audits that occur are regular, ongoing events. Practices are used to them. Treatment centers are used to them. But what has happened since 2008 is that particular effort has become a silo, a division, if you will, a revenue channel for CMS and the payers to go in and pull back dollars they've previously paid to providers on their basis and allegation of no medical necessity or under the guise of the allegation of fraud.
So are they the judge and jury? Or is there a third party that will sort of arbitrate or level set on what's appropriate? It seems like it feels to me like it's one-sided perhaps, but maybe yes, I don't understand.
No, you understand completely. That's part of the frustration, even as a service company or a vendor, if you will, to the facilities. It's very frustrating because there is no independent third party. As a matter of fact, in my office, we refer to the audits, by and large, as legalized extortion. I don't know, who's going to be listening to this and who's going to view it and who's going to understand this, but John Gotti was a mafia boss in New York.
So I've heard.
Yes, and he had an underboss called Sammy the Bull Gravano, who's doing his own podcast right now. If we had Sammy the Bull explaining to us how the mafia worked, it may be akin to the way that the carriers work.
Interesting. So is this a new phenomenon, or is this how it's worked forever?
This is how it's worked for a while. 2005 to 2008, Congress did a sampling focusing on 3 states in an area of medical practices that were known to be high in fraudulent activity. They were so successful, if you will, that they opened it up to 3 more states, and they collected about $1.1 billion over a 3-year period, and then in 2008, Congress made that program permanent. In the reports, in the findings rather, in the report, about 3/4 of the way through the report, all the way at the bottom of the page, about 4 or 5 lines in there said, of those that had overpayment demands, of those that fought, 33% won the challenge. And the problem that we're facing and that we're dealing with, and the reason why this billing audit coverage, this policy it is the most sought after policy, and my office and just an area of expertise that I have, people reach out because they hear about what we do. We're not the only ones with access to it, but we're one of, if not the agency that has the most experience and understanding and knowledge of the full breadth of it.
Okay.
People reach out to us for help. Right.
So tell me more about how that coverage works. What triggers it? What are the limits? Why would a medical practice want to have that versus not wanting to have it?
That's exactly where I was going. Great question. Yeah. So what happens is the demand comes, and I don't know a medical practice or a facility that has a capital defense fund set up within their budget. Nobody's doing it. So what would typically happen is the demand from the carrier would come, the facility would feel that there was no other way around this and would cave to the pressures because to defend themselves is costly. So the policy provides all of the resources, if you will, financial resources, to get a viable defense, to provide coverage for shadow audits, which would allow a consultant to come in and extrapolate the data and in essence give the facility or the practice enough information to validate what their position was to fight the allegations. It covers fines for regulatory fines and proceedings, MTELA coverage, START coverage, and takes them all through the process. What the coverage does not do, by rights of insurance, it cannot cover actual fraud. So let me park that for a second. Most of these cases, all right, so right now the insurance carriers legally are allowed to look back at 1.5 years worth of billings on these audits. Unless, Bob, there is an allegation of fraud up front.
And who would make that allegation? Would that be?
That would just be the payer or the third-party auditor. By the way, the third-party auditors secure 9 to 12% of the recoupment. When they allege fraud...
So there's a financial incentive, if you will.
A little one.
Interesting.
So most of the audits allege fraud because now the window goes from 1.5 years of billings back to 6 years of billings. Quite a substantial growth in size. So generally speaking, they'll take a data set from a sampling of files, and they might say, listen, it appears that you overcharged us, as we deem overcharging, by our reviews of non-medical professionals of the files and lack of medical necessity, as we deem it. You overcharged us 17% on the sampling. So we're going to take that, and we're going to apply that over the 6 years of billings. Now, did you want to write a check for that? Did you want to tap your credit line? Did you want to work for free from us? How do you want to handle the audit?
Interesting. And I imagine this is all approved by the federal government. This is a obvious legal practice. It seems that healthcare providers are under so much pressure to contain cost. Margins are probably the thinnest they've ever been in a long time. You're seeing a lot of mergers and acquisitions and consolidation of medical practices to gain some economies of scale. So should every medical provider expect an annual audit, or is it random? How does that sort of work from an exposure standpoint?
Yeah, great question. So it is random, but to a certain extent. But what happens is either whether the third-party auditors or one of the payers hits, if you will, on a given specialty. For example, two of the biggest targets right now are integrated practices, what is commonly phrased MD, DC, PT practice, where there's a cross-pollination of clients, holistically treating the patient. And then also, sadly, egregiously, and I dare even say grossly, is addiction treatment centers. So, and that's a good place to just kind of talk about it, is as the addiction epidemic it continues, but as it grew, if I were to put for you on a chart the growth trajectory of the epidemic, the loss of life and continued growth of those with substance use disorder, and the health insurance carriers' declination of permission of detox, the shortening of length of stay for inpatient, the fail first positions to manage the healthcare spend, you'd see just it's maddening data. But what has happened is those two areas of healthcare have been hit the hardest as of the last 2 to 3 years.
And is there a reason per se, or because it's such an emerging area of care, that's where the attention is being focused?
Both. Okay. Both. So you see the billings increased. I mean, if the care increases, the billing's going to increase. And you have the discussions with people in the marketplace, and they say, well, those particular facilities are, whatever they're talking about, they're very fraudulent. They're billing, well, they're treating patients at a very high level, a very high quantity of patients. So the billings are going to go up. I mean, you're always going to have the outliers.
Sure.
Are there people that act fraudulent? Absolutely. Are there people that are not doing it for the care? I mean, every business needs to make money to keep treating patients and to keep the doors open, but sure, they exist. They're the overwhelming minority.
Interesting.
Yeah.
Interesting. So what percentage of medical practices that you work with or see, perhaps prospects, that either have this coverage or don't have this coverage?
Okay, great question. You're firing on all cylinders, Bob. I appreciate
Seems like a logical progression.
No, it is. I appreciate that. So I can't give you a percentage, but what I could tell you is the majority of new clients that we're getting are coming from the healthcare medical practice world, are coming because they've heard about the audit coverage and they have a friend that got caught in an audit and couldn't get out, or in some cases, the worst case was they lost their practice. We're dealing with one right now, Bob, if you don't mind me sharing here.
Sure.
A physician out in the Midwest who had a CMS audit come in. 3 weeks later, a third-party payer audit came in. Another week later, and this isn't made up for podcast, this is actual
real-life data.
Real-life data. We had a conference call with the attorney last week with the provider, and she broke down in tears. It is, we have been privy to audio tapes from these third-party auditors that are threatening. They're literally threatening PR nightmares. Some actions by a court on fraud, and the provider in that particular situation was absolutely beyond above board. But it's very unnerving, and it can make people run the other way. And good quality providers, they're just inundated with regulation, and now they have this to deal with. It's horrendous.
Right. Well, it sounds like it could be a pretty financially devastating event to a provider. And again, at a high level, I know every risk is different, every practice is different, but is this expensive? And is that why perhaps some practices don't have it and some have it? Is the underwriting cumbersome? Is it difficult? What sort of qualitative things do you look for a practice that doesn't have this coverage and, quite frankly, probably needs it? So is it just, hey, give me a couple of $100 extra and we'll take care of this? Or, is there a thought process? Is there a claim history review? Their past experiences, so on and so forth. Does that factor into it as well?
Yes, their past experience with audits does factor into it. Most of the practices that we write the audit coverage for, do not have prior audits. It's a very simple application. The carriers have a very easy, smooth underwriting process. A few very important points of data that drive the premium are the revenue, are the billings per payer, how much CMS, how much cash, and the number of patient files that they have, because that speaks to the breadth of the operation. Your average premium, minimum premium, is somewhere around $2,400. I think it's $2,475 now. $2,500 deductible, $1 million limit, and we build into it a cyber component, and that cyber product is a very deep, very broad coverage, because that's the secondary, most common claim we're seeing right now. Is claims of HIPAA violations based on patient data being released.
Right, and when these audits occur, who are the players? Is it really just the auditing firm and the provider, or are there specialists, perhaps attorneys or accountants or forensic accountants, other third parties that the client can bring in to sort of validate or bolster their position? Or is the provider just sort of at the mercy of the auditor and you just basically hope it goes well? What does the team look like, if anything?
Yeah, so the team generally, if they have coverage, obviously it looks like my agency, our agency, and a very experienced law firm you want engaged to defend you. We've had insureds previously
Mhm.
that go back to their corporate attorney, which
It sounds to me like this is a specialty.
this is a deep
Right.
specialty. You want to understand not only the laws, but how experientially these audits work. And so we have a strategic partner, non-financial arrangement, by the way, a relationship with a firm out of New Jersey that is the nation's leading law firm in defending audits. They've taken many carriers to task in class action suits and won in a big way. And there's nobody better out there in the industry. And is it okay if I can say the name of that law firm? Or
Sure.
yeah, it's Butacci, Liardi, and Warner.
Mhm.
Brilliant practitioners of law, understand this. I've learned so much from them over the years. And then from that, they quarterback the full defense of it. So they'll get the forensic accountants if necessary. They get the shadow audit consulting company. There is one nationally that does a tremendous job that we work with a lot and suggest.
Right, and as we wrap up, so how long do these audits typically occur? Is this a get in at 8 o'clock in the morning and leave by 5, or do these processes last days, weeks, months, longer? Can you just give us a feel for how long this experience lasts?
Yes. Oh, it's a painful experience, Bob. The audits themselves,
Right.
the auditors get a sampling of files. So that's usually done off-site. It's when the demands come in. You see anywhere from a year to 3 years. Now, we have one of our insureds that eventually, hopefully, we'll be doing a podcast with that's ready to go public. And we're hoping to get some media attention. What he and his practice has been through is nothing short of theft. I mean, it stole his time, his energy, almost destroyed his marriage, destroyed a couple of the practices that he has across the country, defending himself, and he is 100% clear and innocent. And unfortunately, CMS knows it, but he's one of a number of parties, and they're just looking to get some money.
Right. Well, I have to tell you, this is a fascinating topic. I'm sure we can talk about this all day. Just from a personal standpoint, there's certain industry groups that I don't want to squeeze for price.
Right.
If I'm going to a doctor, I don't want to. I want a doctor that's doing well and getting paid well, as I would an airline pilot. There's just certain things, and it always fascinates me why there's such pricing wars for cheap airline flights. Because it's I don't want a cheap pilot, and I certainly don't want a cheap doctor or medical firm. And it sounds to me like this could be a real expense and a disruption to a medical practice. So
Huge.
I must say that I was not aware of this. I'm thrilled that you're an expert in this field. If people want to engage with you or talk more about this or learn more, how is it best to contact
They can
you?
contact the office at 856-825-2880 or go to mintzinsurance.com.
Great, super.
Yes.
Well, thank you for sharing this with us today. Thank you for imparting this great knowledge on us. Again, my name is Bob Mazey. Thank you for watching, and we look forward to seeing you again. Thank you.